Manishi Ray Chaudhary, MD as well as Head of Research at BNP Paribas Securities joins in. Manishi, hi, morning. The markets have clearly been trading in a very narrow range approaching the earnings. How much chance do you assign to a pre-result rally, if at all?
Not much, to be honest. Because I think the bigger drivers for the market are at this stage are possibly not the results, but what happens to global liquidity. And domestically, what the central bank does on April 17th. That's hardly about 4 or 5 trading days from now. So, if you look at the facts recently, the way things have panned out, the uncertainty on the policy environment, the uncertainty on fiscal deficit, the uncertainty on inflation going forward, those uncertainties still continue. But still, the market hasn't really corrected very significantly, and that's to a large extent to do with global liquidity. And as a consequence, the FIIs have still been buyers in significant measure. So I think this is going to be one critical factor in driving markets, not just in India, but also all across the region. The second important indicator that we are going to have is from the interest rate environment and what the Reserve Bank of India does on April 17th. I think, about a month back or even a fortnight back, it was almost a foregone conclusion that RBI would start the interest rate reduction process on April 17th. But now, with concerns on fiscal deficit re-emerging and concerns about inflation getting enhanced, I don't think that's really a foregone conclusion anymore. In fact, if the RBI chooses to leave rates unchanged and only enhances CRR slightly, I think the market would be in for some more correction. So I think those are the indicators that we will have to watch out for in the near term.
Morning, Manishi. Nikunj also joining in. So at BNP Paribas, what is your take? Do you think Q4 earnings this time around they could surprise us, or they have scope to disappoint us?
You see, the result season, in our opinion, is not likely to be that bad. It would possibly be similar to what we had seen in the third quarter, that's the October to December quarter. I could share some numbers with you. As far as the BNP universe is concerned, we are expecting a top-line growth of about 17 to 18% and earnings growth somewhere around 12 to 13%. That said, this number is being dragged down by the commodities, particularly metals and mining. So if I were to strip out the commodities from this number, earnings growth would increase to somewhere close to the mid-20s, somewhere around 25 to 27%, and that is a strong number. I would also like to share one more data point with you. If you look at the consensus EPS numbers as far as Sensex is concerned, and I stress on that word consensus because that's an average of many market participants, that number has actually increased over past one quarter. Not much, by just about 1 to 1.5%. But nonetheless, that is a reversal of the trend that we have seen over past 5 quarters. So we may be at an inflection point, or maybe close to an inflection point, as far as the earnings environment is concerned.
Manishi, what is your Sensex EPS estimate for FY13, and how do you see the market valuations in that light? Which sectors do you see outperforming, and which ones do you think are going to disappoint from here onwards?
Our current EPS is 1282 for fiscal 13, which means that the Sensex is trading at about 13.4 to 13.5 times 1 year forward. And we think that while this valuation is not really expensive, it's not very cheap either. The market really becomes cheap when it's about 1 standard deviation lower than the mean, which means about 12 to 12.5 times, implying that the market could correct maybe about 7-8% from the current levels. And as far as the stocks and sectors are concerned, we think that one has to play a balanced game right now. So we have both the domestic cyclicals like autos and engineering in our portfolio, as well as some of the defensives like IT services and pharmaceuticals, and some of the regulated utilities like GAIL and NTPC. And within those sectors where we are positive or overweight, we are really focusing on the stocks that provide us some visibility about revenues and cash flows like Tata Motors, Hero MotoCorp, or L&T and IRB Infrastructure. And we currently have a small underweight on the banks, but within banks we have overweight on the private banks, and we don't have too many public sector banks in the portfolio.
So at BNP Paribas, Manishi, what exactly are you advising your clients? What are your top ideas for their FY13?
Well, there could be quite a few of them, but if I were to name maybe just about 2 or 3 of them, I would possibly name Tata Motors from the autos pack. Maybe one private sector bank, which is Axis Bank, and maybe one engineering company, which can be either of L&T or IRB Infrastructure. IRB possibly looks safer at this point of time because the road segment is doing well within the infrastructure space, and IRB is also a lot cheaper.
Manishi, before we let you go, what is it that you're expecting from the IT sector? Is there room for disappointment ahead of Infy's numbers tomorrow?
See, as far as the earnings numbers are concerned, I think both consensus estimates and our estimates are pretty close together, so I don't think there's much room for a disappointment compared to the expectation that the market has. The real thing to watch out for is the guidance, and I think some of the large IT companies like Infosys, they have never been very aggressive in terms of giving a guidance at the beginning of the year, even though they have routinely outperformed the guidance that they gave. So I think there could be some near-term volatility in the IT sector. Over the longer term, it all depends on how the US corporate sector performs. And as I said, that the US companies, they are doing exceedingly well. They're generating record amount of cash, and as long as that continues, I think orders will continue to come the way of Indian IT companies.